The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
Friday the 24th, 30 minutes to the close. What do you need to know out of Europe this hour? German business confidence falling to a 5-month low. This ahead of a general election this weekend that looks too close to call. Panic buying returns to the UK as shortages of truck drivers and key materials means that basically we're seeing shortages delivered to consumers and businesses. The Prime Minister apparently, he wants this fixed yesterday. We'll see what that means. And while it's a negative picture today, it's been actually a positive week for European stocks. Despite Monday's sell-off, the Fed's taper talk, rising yields, Evergrande uncertainty, oh yes, and those poor PMIs. Let's take a look at where we are right now as we come into the close. As I say, we're down by around 0.8% on the stock 600. We're giving back some of the ground as well that we saw yesterday gained by the British pound on the cable rate. Yields, though, Alex, continuing to creep a little higher.
Yeah, same deal here in the U.S. I do want to point out that you had Bank of America in their weekly outflow chart said that there was about $28.6 billion that came out of U.S. equity funds this week, just in the first 3 days of the week. Huge, huge, huge amount. But today, the reflation theme is really front and center. So S&P is down by about 0.1%. But now you have energy and financials all leading the way within the S&P on the upside, as you have yields picking up a little bit more, up 2 basis points, up to 10-year, 145. We haven't seen that level since the beginning of July. So there is the reflation theme permeating throughout the markets. Idiosyncratically, you have the Bloomberg Galaxy Crypto Index. I want to do that because it highlights all forms of crypto, still off by about 7%, but we're kind of holding on to that downside. We're not seeing any more selling pressure in addition to that. Also, Nike, I wanted to highlight, again, idiosyncratic in that it's only about 0.5% of the S&P. It's down 7%, but it does really go to the supply chain issues. They just can't meet the orders. Demand's there, supply's not. Front and center.
Alex, the story around China is getting a little bit more interesting and murky all at the same time. Evergrande's New Energy, NEV, is making some comments right now. No guarantee that it can meet its financial obligations. Some suppliers have suspended supplying of goods. Basically, we find ourselves in a situation where we know that there is a cash shortage. We don't know ultimately how the remaining cash is going to be distributed. We've probably got an idea that the first thing that any money is going to be used for is to finish current projects, i.e. that retail buyers of property are ultimately probably at the top of the capital structure. But we're still trying to find out. We're waiting for details on what is happening with this dollar bond payment, which we still don't have any clarity on. Let's try and get an update and try and fit this all together to try and form a coherent picture. Tom Orlick of Bloomberg Intelligence joining us now with the latest. He's tracked China for years. Tom, what do you make of what is happening right now? What is your expectation of what happens going forward?
So, 2 bits of news from China overnight, Guy. Firstly, the government has stepped in and taken control of some of Evergrande's bank accounts, intending to ensure that those funds are used to complete construction of properties, not to repay creditors. Secondly, Bloomberg News has heard from 3 holders of Evergrande's bonds that they have not received so far the expected interest payments. So the situation with Evergrande continues to unravel. The key question in my mind, how closely does the government ring-fence this and prevent contagion? We think Beijing has resources and motivation to stop this turning into a Lehman moment. We don't think China is on the brink of financial crisis. But it wouldn't take China going into crisis for this to send shockwaves around the world and change sentiment in markets and potentially change the dynamic for the Fed and other central banks.
Tom, thanks a lot. Tom Orlik of Bloomberg Economics. We really appreciate that. But still, definitely a big question mark when it comes to that dollar bond payment and what the recovery rate could even look like at the end of the day. So China stepping in, though, the PBOC, I should say, is stepping in and pumping billions of yuan into the overall market to help support the economy and any kind of ripple effects. They also tackled the crypto world today. The government announcing that all transactions of cryptocurrencies are illegal, effectively banning digital tokens like Bitcoin. Here with the latest is Bloomberg's commodity and cryptocurrency reporter, Eddie Vanderwalt. Eddie, if you talk to the crypto bulls, they're like, yeah, it's okay. You still got a lot of demand elsewhere. It's just normal. You can just wall it off. It's no big deal. True?
Cryptocurrencies are bigger than China. That is definitely true. But this is worrying for cryptocurrencies because, look, number one, if China cracks down, this is a really big source of demand. It has been a place where people have used cryptocurrencies to move money about and out of the country. And secondly, if they are successful in cracking down on this, that proves that global governments can crack down on Bitcoin if they want to. And not all of the, there are many other countries that are not exactly happy with what's happening here.
Eddie, I'm going to wrap you up there. I think your mic might have dropped off. So we can't hear you. Usually, I want to hear every word you can say, but I can just hear this kind of rustling.
It's because they made me dress myself this time.
What'd you do with it? Eddie, where is it? What'd you do?
You don't want to know where it is. It's somewhere down there. We apologise. We apologise for the rustles. We'll get a clear and concise view from Eddie Vanderwalt. I hope he's joining us on radio to talk about this a little bit later on.
I was going to say, radio. We'll talk to him on radio, and we'll get a much better impact. There won't be the mic problem, hopefully.
Yeah. We'll get it all sorted. The other story that we should probably focus on as well is what is happening here in the UK. I think it's a broader narrative. It's not just related to the UK. The UK does seem to be suffering more than most, though, and that is the issue of supply-side shortages. This is labour. This is the lack of availability of truck drivers, HGV drivers, as they call them here. We are seeing, obviously, Brexit having a factor in terms of what is going on. The Prime Minister, Boris Johnson, who had hoped to have a good week, apparently wants this fixed ASAP. Andrea Felstead of Bloomberg Opinion joining us now to give us her take. How serious is it?
It is serious. This is happening all around the world. It's because almost every bit of the supply chain, from the factory in Asia to the grocery storeroom, is clogged up.
Then I guess the question is, how soon can those things wind up being fixed, and what's less transitory?
I think they're not going to be fixed overnight. In the UK and the US, there's a struggle to get lorry drivers. That's going to take time. So I think the big battle for Christmas is it's not price, it's going to be availability. And what we're also seeing come through is that this is now started to feed into higher prices, delays, input inflation. It's starting to come into higher prices, and I think that's going to be here for a little while.
Yeah. Excellent point. All right, Andrea, thanks a lot. Andrea Felstead, Bloomberg Opinion columnist, joining us there. And last but not least, Germany heads to the polls on Sunday. That's going to usher in a new political era for both the country and the wider European Union. Here with the latest is Bloomberg's Aggie Cantrell from Berlin. Where are the polls? What do we expect?
So you can tell already that this is going to be an incredibly tight election. In the last couple of months, it's really seemed like Scholz, under his own personal popularity, Scholz from the Social Democrats had really led in the polls, and so had his party. But now that lead is tightening to, in some polls, only a single or 2 percentage points. And what that really means is that in Germany, it's not just a question about who gets the largest vote share, especially when that vote share is so much smaller than it would usually be, for instance, when Merkel has ran in the past. What we're actually looking for is what will happen and how they will be able to build coalitions out of that vote share. So Scholz will be trying to go to the Liberals and the Greens in the coming weeks and build that coalition, the so-called traffic light coalition, and convince the FDP, the Liberals, that it is worth joining a coalition with him, even though they're reticent to higher spending, removing the debt brake, and higher taxes. However, the alternative is also that Armin Laschet and Merkel's Conservatives are not out of this race at all, and they could build a coalition and ice out the Social Democrats.
Aggie, we look forward to the coverage over the weekend. I know we've got some great lineups ahead of that to give us an idea of what is going on and what the permutations could ultimately look like. Abby Control joining us from Berlin. We have, as I say, some great coverage. We're going to carry on the conversation on this program as well. Klaus Wissensen is joining us. We'll get his take on what is happening here. But tune in Sunday, 5 p.m. UK time, 6 p.m. in Berlin for our Germany Decides coverage. This is Bloomberg.
German businesses are worried about the supply problems. German manufacturing is really experiencing a bottleneck recession. Production is declining, although order books are full. And then there is, of course, the medium-term outlook. Energy prices are one issue.
Kevin Forst, the president of the IFO Institute, speaking on Bloomberg Television a little bit earlier on today, highlighting the, quote, bottleneck recession that Germany is facing right now. German growth is, as a result of which, slowing down into an election weekend. That's not normally the kind of politics you want to see. Klaus Wissensen, Pantheon Economics chief Eurozone economist, joining us now. Klaus, is this going to be a factor, do you think, in this election? Germany is facing bottlenecks, mainly on materials rather than labor, but nevertheless, the effect is that we are seeing a slowing economy.
Yeah, absolutely. The German economy is slowing now. I mean, I think it was always going to slow in the fourth quarter and into Q1 because, you know, growth has been so strong in Q2 and Q3 because of reopening. So I think a lot has already been baked in the cake. I noticed, though, that IFO, which you just referred to, they've just cut their forecast for 2021 quite a bit in the near term. So, you know, there could be some downside surprises in the near term still. But I think in terms of the election, I think this is probably not going to be a huge issue in terms of it's happening now, or it has just happened in the last couple of months. So I think that probably that's not going to make a big difference at the moment.
Klaus, I mean, but also it is, you know, global, so it's every country has this issue. But I wonder, in terms of fiscal spending overall. So you have the possibility of a coalition led by the Social Democrats that could be much more aggressive on spending. And then you also have sort of the slowdown in the economy in the short term. And I wonder if we're kind of in for a little bit more stimulus than maybe we would have thought. What do you think?
This is the big question. My straight answer would be yes. I think if you look at the possible coalition constellations after Sunday's vote, all of them are likely to be sort of more pro-growth friendly from a fiscal policy perspective than the current government. We also have to consider that, you know, Germany is spending more, has spent more to combat the pandemic. So in some sense, we've already made a transition, even in Germany, towards sort of a more pro-growth fiscal stance. So I think sort of a more stimulative fiscal environment is coming in Germany. The question is, to what extent? And this is, you know, goes back to your reporter from Germany. This is very, very tight, very close to call, very difficult to see a clear result on Sunday because, you know, the coalition talks could go either way. But yeah, I mean, Bunds on Monday and Tuesday, depending on the results here, could be interesting because I think we are looking at a more pro-growth fiscal environment, no matter what happens.
Okay, that's interesting. What challenges does Angela Merkel leave whoever ultimately succeeds her? To my mind, China stands out as a potential huge issue for Germany to resolve. The US is taking a much harder line. Germany has taken a much more mercantile approach. How does this work out in the next parliament?
I mean, this is obviously going to be very difficult for Germany and Europe. I think, again, Germany and Europe is going to try to find a way in the middle between China and the US. In some sense, they're dependent on both. So they will obviously try to please both sides, at least to an extent. But in terms of the hard line against China, a lot of it depends on what the US does, especially on a security level. Of course, Europe, in some sense, is forced to follow the U.S. lead there in some sense. So again, I think Germany and Europe will wait and see a little bit in terms of how far the U.S. The U.S. goes over the next sort of 12 to 18 months.
Well, which brings us to the Evergrande situation. You've had some European banks come out and say, we don't have our exposure. The FT had a report that Credit Suisse actually sold down their Evergrande exposure. Christine Lagarde earlier today was talking about that too, that they don't see a lot of exposure. What would the circumstances have to look like where the Evergrande issue feeds into growth, feeds into banking, feeds into something a little bit more dramatic for Europe?
Well, I mean, look, as far as the direct exposure is concerned, it's very minimal. But the point is there's an indirect exposure, there's a contagion. And right now, when I speak to people, when I look at sort of markets in Europe, we're operating with the assumption that Evergrande might fail or fall, but, the PBOC and the authorities in China will make it a soft landing, right? I mean, that's a complacent assumption, and we don't know. But so the risk of contagion is there. China was slowing already before this hits. Of course, in manufacturing, you're probably going to see more downside. But at this point, we just have to wait and see in terms of how far this spreads in terms of contagion.
In terms of how we should think about the exposure, though, the Chinese economy has been driven by what has been going on in the construction sector. Germany, Sweden, manufacturing countries in Europe have supplied a lot of the stuff that is required to make that construction boom happen. If we continue to see the homes being finished, but ultimately a slowdown in the process of building, how quickly does that come back? What is the rate of change? What is the transmission from one to the other? What's the speed of transmission?
Well, the speed will be quite quickly in terms of a slowdown in Chinese property and manufacturing. I mean, in terms of the cycle, 2 to 3 months, we will see it in the data, especially if it's a sharp slowdown. Sort of more structurally in the idea that China is trying to engineer a transition away from focus on fixed capital formation in the property sector towards consumer spending. I mean, that's potentially more positive or sort of more balanced for Europe. But in the short run, I mean, if the Chinese property sector have a Minsky moment or something and everything just stops, I mean, that would be very bad news for Europe, of course. I mean, for the global economy.
Well, sure. I mean, but this brings us sort of full circle back to Germany, which leads me to central banks. I mean, we see the BOE getting more aggressive on hiking, the market repricing for that. Same with the Fed, the ECB not. They're sort of diverging. And I wonder the power of China to disrupt that trajectory of raising rates.
I mean, look, again, I think the answer is simple. I mean, if chaos erupts in Chinese financial markets and in the property sector, that could very well postpone any plans any central bank might have of tightening. Of course, in the case of the two central banks you mentioned there, the Fed and the BOE, the Fed is now expected to start some form of tapering, and that's going to be a smooth tapering. And then at the Bank of England, markets are pricing in a rate hike or even 2 next year. I have to say, for our part of Pantheon Macroeconomics, we do not think that's going to happen. We don't think the MPC is going to hike rates. So again, already there, we are kind of taking the other side. But then again, at the ECB is still very accommodative. And right now, the ECB is discussing whether to go from a position of maximum accommodation to slightly lower accommodation, right? So yeah, again, the central banks will respond if financial markets throw a tantrum. We know that. And this is no different this time.
All right, Klaus, really good to catch up with you. I really enjoyed the conversation. Klaus Vistesen of Pantheon Economics, thank you very much. All right, coming up, we're going to have more on what's happening in the Bitcoin market after China's crackdown. Meltem Demirors, CoinShares Chief Strategy Officer, will be joining us next. What this means, the China crackdown for the crypto industry. This is Bloomberg. All right, the other big story we're following today is crypto prices tumbling after China's ban on crypto-related transactions. Want to get more insight now with Meltem Demirors, CoinShares Chief Strategy Officer. CoinShares is a global digital asset management investment firm that currently manages over $4 billion in assets. Okay, when you say transactions, and you read that headline, what did transactions mean for you?
Transactions mean people interacting with Bitcoin exchanges, so platforms that facilitate the trading of Bitcoin. But in this instance, China also specifically called out OTC or over-the-counter transactions, which are typically facilitated through broker or sometimes even peer-to-peer. And typically they're facilitated using a stable coin like Tether or USDC. Those seem to be the dominant trade pairs rather than the CNY BTC trade pair, which really hasn't seen much volume in the last year or so.
Are we done with cryptocurrency in China? Is China done with cryptocurrency? Is it over there? It looks like they're trying to wall the whole economy off from this stuff.
Yeah, absolutely. I mean, look, China has banned crypto close to 8 or 9 times now, I believe. And I think, you can only ban something once. Each subsequent time you ban it is basically an admission that you really couldn't ban it at all. I think the challenges that China has had sort of enforcing these various Bitcoin bans they've implemented throughout the years really highlights the strength of Bitcoin as a decentralized peer-to-peer financial system. Anyone with access to the internet can access the Bitcoin network. But again, I do think China has recently taken an increasingly aggressive stance. We saw what happened with Jack Ma after he spoke out against the CCP's policies, which curtailed the Alibaba IPO, obviously. We've seen what's happened recently with the ban on the time teens can spend on gaming, an increasingly aggressive stance towards Taiwan. So generally, I think the atmosphere in China is really shifting. And I think the CCP across a number of different fronts has just become much more aggressive in its tone.
So what do you think happens? Like anyone who has crypto stuff just like sells it? What's going to be the reactionary impulse within China from this?
Absolutely. And look, the very clear thing that we need to note here is people who already hold cryptocurrencies are not banned from holding them. I think what's really being done here is it's an attempt to stem capital flight out of the country. Obviously, Evergrande is the story we're not really talking about in context of this announcement. The CCP needs to make a decision around Evergrande. I think it will have some impact in the Chinese market and potentially the broader global equities market. But I think, again, they're really trying to focus on minimizing the ability of capital to flow out of China and CNY into Bitcoin. So I think it's very important to note that this doesn't impact existing crypto holders. It does, however, impact the broader crypto ecosystem. There is a common misperception that the majority of trade flows are still driven by China. Although in the last 12 months, we've seen that shift dramatically. The majority of crypto trading now actually happens during US and Europe trading hours. And the Bitcoin USD trade pair is much more prominent now.
Melton, are you basically saying that this announcement is part of the Evergrande response? Just very briefly.
I think there's certainly a linkage. I do think the CCP is very concerned about stemming capital flight and ensuring that they can continue to maintain very tight control of the Chinese economy.
Melton, great stuff. Thank you very much indeed. Melton Demiraz, I think I probably mispronounced that, so I apologize. CoinShares Chief Strategy Officer. Thank you very much indeed. Alex got it right. I got it wrong.
Which never, ever, ever, ever happens. So let's just take a moment and do a little victory dance for me. It's more that I got it right.
Okay, you've done the dance. This is good. This is Bloomberg. So we're wrapping up the week here in Europe in many ways like we started, but not quite so bad. So Europe is trading down today. Equities are off a little bit, not by actually that much. And on the week, we're positive. But this is the picture, as you can see. The CAC's down by 1%. The DAX is down by 0.75%. The FTSE 100 actually only down by 0.3%. We have a negative pound today, which is worth bearing in mind. Plus, we've also got some pretty good news coming through from AstraZeneca today. Rolls-Royce getting a nice upgrade. So those are helping out the FTSE 100. Let's talk about the week, though, because actually I think this is where things get interesting. Europe has really rallied quite hard out of the Monday sell-off. And I think this is quite significant. This was the kind of the gap lower at the beginning of the week, and then actually some quite positive sessions, mainly driven at the beginning of the session, as you can see, gaps there, gaps there, gaps there, and kind of gentle inclines in the middle. But we reached a peak yesterday. We faded a little bit today, but on the week, we're still up by 0.3%. Monday, kind of people were talking about the world coming to an end. I appreciate that we haven't seen any kind of a correction for a very long time. Kaylee Lines has got a kind of running total on this. But nevertheless, everybody got very excited about the fact that finally the market was actually having some downside. In terms of what has driven things this week, travel and leisure's had a really positive week, up by 3.77%. We have seen, obviously, the lifting of the travel restrictions into the United States, adding a huge amount of upside to that sector. We've had the story around Entain as well, which has helped out there as well. But energy's kind of really turning out to be quite an area of excitement at the moment, not just for Alex Steele. It's up by nearly 4% this week. The car sector's doing well, the banks are doing well. Any concern around Evergrande seems to have been parked for now. Healthcare is actually having a fairly good week as well. Bottom end of the market, retail, unsurprising. Look at what is happening in the retail space right now. Really big problems in terms of the supply chain story, and that's really manifesting itself there, down by 1.6%. So that's the picture on the week. Let's talk about some of the interesting stories today. We saw the Nike news overnight, significantly downgrading its expectations as a result of problems that have been experienced out in Vietnam. You wonder how much inventory is on the water right now ahead of the Christmas period, because demand is definitely still there. It's rippling into other stocks as well. So the Nike story rippling into Puma, rippling into Adidas, down by 2.51% today. Rolls-Royce getting a big upgrade, up by 4.32%. I highlight that because it's one of the factors that is lifting the FTSE 100 or providing some lift for the FTSE 100. I appreciate it's negative, but it's a supporting factor on the upside. So we're getting a little bit of outperformance there. The pound, another factor as well. So Rolls is up by 4.32%. And then AstraZeneca, again, a big factor for the FTSE 100. Remember, this is the biggest weighted stock, up by nearly 2% today. Some really positive news coming through on one of its prostate cancer therapies, really giving the stock quite a big boost. But Alex, it's been an incredibly turbulent week. We are up at the end of the week, but I think the volatility, I think, has definitely got everybody sitting up and paying attention.
Yeah, talking about paying attention, Fed Chair Jay Powell is talking at a Fed Listens event. He says he's, quote, never really seen these kind of supply chain issues, to your point, on Nike to Adidas to Puma. So that also really sets the stage for Germany when it goes to polls this weekend. The politicians vying to replace Angela Merkel as chancellor had one last chance to persuade voters in a leaders' debate last night. Sparks flew.
Europe is looking at Germany and what government will be formed.
We have to make sure, together with France, that Europe progresses.
I want to make sure that we create a united European approach towards China.
We are the big country in the middle of the European Union with the biggest population and the biggest economic strength.
We need to start projects together, also arms projects, to be able to act together when the USA steps back.
I want to highlight the fact that for an American watching a debate, Sparks might have been overselling it just a little bit. All right, let's get more on what we can expect with Midge Rahman, Eurasia Group's head of UK and Europe macro coverage. Hey, Midge, what's your base case for what we see on Sunday?
I think we're looking at Olaf Scholz, most likely, sitting on top of what we call a traffic light coalition. So the left does a deal with the Greens, as well as the FDP, this small liberal centre right-leaning party, and they'll form a coalition over the next couple of months. I think that's probably the most likely base case.
What does that mean for fiscal spending? Does the FPD rein in any of the bigger spending aspirations that the two larger parties in such a constellation would produce?
So that's the right question. It's really about what Christian Lindner does or does not allow. I think that's absolutely the right question. The concern we have is a bit more let's say, flexibility within Germany comes at the expense of more fiscal space for the rest of Europe. And of course, the countries to think about there in particular are Italy and France. We'll get some perspective, I think, over the course of the coalition negotiations. I think, contrary, I think, to consensus, a government could actually come together quite quickly, partly because Lindner probably doesn't have as much leverage as most people think. He blew coalition talks up last time around. If he doesn't deliver this time around and you know, ultimately deliver the FDP into government, his career is toast probably. So I suspect he will do a deal, although he will hold out for concession. So I think a bit more space domestically. Question about what that means for Europe, I think, is the way we're thinking about this.
So it feels like the consensus is an Olaf Scholz sort of leading that coalition government. What is priced in, and what's the risk to that being wrong? And I say that because we know the polls. Like here in the U.S., the polls are somewhat irrelevant in many ways. The U.K., same kind of thing. Walk me through that.
So look, I think there's always a possibility that Armin Laschet, he's been a terrible candidate, extremely weak on the campaign. Scholz hasn't been much better, frankly, but he's been a bit better than Laschet. There's always the possibility that the CDU-CSU will deliver a result on Sunday. Opinion polls are suggesting there's up to 30% undecided. If you look across the German population, you could argue structurally a majority of the population is conservative. So there are structural advantages that the CDU-CSU enjoys. And I think over the last few days, those polls have been tightening. What does that mean domestically in terms of policy outcomes for Europe? The differences between the two, probably not that much, frankly. I think you are looking at fiscal space domestically. You are looking at a bit more perhaps at the margin for Europe, but there's a bit more uncertainty, a tougher stance against China. Yeah. I think Orban's run out of rope, so we're going to see a tougher stance against Hungary in the polls. What really changes between the two? It's not that obvious.
In terms of what we need to see happen, though, in terms of what should happen, what are the biggest challenges that Angela Merkel is leaving her successor? What does Germany need to sort out? Whether or not it gets resolved, I don't know. But what do you think the next chancellor should be looking at, prioritizing when it comes to Germany?
So I think for both Germany and for Europe, it's the same question. I think creating fiscal space for high quality investment in public goods to facilitate digital transition, the build out of infrastructure, and enabling Europe to get on this trajectory to meet its political and legal commitments for net zero to 2050. Now, what Germany does domestically, I think, is equally important for Europe to ensure that there is sufficient fiscal space after 2023 to both facilitate recovery and lock in this net zero transition.
Midge, what about China?
Look, I think the Germans with the Greens in government in Germany will probably try to do more of a balancing act, what we're seeing in the UK, but also the rest of Europe, which is kind of have your cake and eat it. So decouple the politics and the economics. Yes, I think we will see a narrative out of Germany that wants to be tougher on China, tougher on human rights abuses, tougher on Hong Kong, tougher on the issue of the Uyghur Muslims. But at the same time, we'll seek unprecedented market access for European firms operating in that market and vice versa. The Europeans will seek to equip themselves to the extent those markets are not being priced open, to the extent Chinese firms are enjoying subsidies, are competing unfairly in Europe. But I do think this decoupled approach, the language may be different, but fundamentally, practically, in policy terms, I think you'll look at a decoupling of the economics and the politics.
Midge, the question is always being asked, if you want to talk to Europe, who do you call? Previously, it was Angela Merkel. Is it now Emmanuel Macron, at least for the time being? Is this the leadership transition we're about to see in Europe?
I mean, Guy, the problem is Macron's got his own election. I'm sure he'd love to be the guy that you call, but frankly, he's got a very difficult election he's facing on the 10th and 24th of April. Macron is vulnerable because he's got the COVID challenge in front of him, not losing to Le Pen, but getting knocked out of the first round by a centre-right candidate who then goes on to beat Le Pen. But Macron is vulnerable. That's the big problem with Europe. I think we're looking at weaker German leadership in Europe in a context where France is also moving through its transition. And I don't really think you're going to get any stable equilibrium or coherence out of the European Union until at the earliest the summer of next year. That's when we'll have a new French leader with a parliament in place. That's when the German leader will have settled in. Hopefully there'll be a coalition, and then we'll see what happens from that point going forward.
There's a lot of things that are going to have to happen between now and then. Some stability would be nice. Midge, always a pleasure. We'll look forward to seeing exactly what this election delivers. Midge Rahman of Eurasia Group giving us a briefing. We're going to have some great coverage. We're going to give you a briefing as well as we work our way through this weekend on an updated basis. We're going to have coverage and analysis. The polls are going to close Sunday night. Do not miss out. It's going to start at around 5 p.m. UK time. We may get a result, we may not get a result, but we're going to continue to monitor the various permutations that start to come out of this German election, Alex.
All right, well, some breaking news here in the U.S. So Fed Chair Jay Powell is speaking at a Fed Listens event, and he's talking about the supply shortages and labor shortages. And he says, quote, we've never really seen these kind of supply chain issues, never had an economy combine such job shortages and slack. It feels like
that's a huge problem.
Yeah.
That's a huge problem for the Fed because they've lent in on this idea that they're focusing on the labor market. And you've got a problem in the labor market in as much as you say, as Powell says, huge amounts of slack, people worried about COVID, people not coming back into the supply side of the labor market, yet there are shortages elsewhere, so prices are going up for labor.
But
that's a massive problem for the Fed to manage.
I think also longer term, if this unanchors inflation expectations, we already know the short-term inflation expectations have been rising, but if it starts to unanchor the 3 to 5, the 10, that's where I think it gets even trickier for the Fed, because how do they manage that? Do they have to bring a hike forward to sort of tampen down on that? But they also can't literally bring people back into jobs.
No, but the idea was that you would run the economy hot so it would reach the outer edges of the labor market and pull more people in. That's turning out to be much more difficult than it normally traditionally would, and the pandemic is definitely causing problems with that process.
Yeah, 100%. You know what's also hard? Going into space. How's that for a completely horrible transition?
That's a bad
it was just bad.
segue.
It was all bad. Civilian space travel. You got Jared Isaacman, the commander of the Inspirational 4, joins us on his historic flight last weekend. It's Bloomberg.
This is Bloomberg Markets, the European close. I'm Rishka Gupta, and you're looking at a live shot of the principal room. Coming up, Peter Matuszek, the Forsa head of politics and social research. This is Bloomberg.
Doesn't get old, does it? The SpaceX launch last week, the first time that we've seen an all-civilian crew up into space, proper space, far out space, an orbit of around 360 miles above the Earth. When that happened, Ed Ludlow was at a safe distance. He was a couple of miles away, watching what was going on, nice and safe at that distance. He's joined now by a man who was a little closer to the action.
Just a little. Yeah, I'm delighted to be joined by Jared Isaacman, the commander of that Inspiration 4 mission, and of course also the CEO of Shift 4 Payments. Jared, I don't know if you remember, but I asked you 24 hours before launch, why 360 miles? Why take the added risk? Why not play it safer? My question to you now, do you wish you'd gone further?
I sure do.
Why is that?
Well, you know, people talk about the overview effect, looking back on Earth from such an interesting vantage point, and the impact it has on you. And it had an impact to me because we were a little bit higher. In fact, we went so high, there's probably less than 25 people in the world right now who've seen the world from that perspective. And what I saw was the space around Earth and the moon rise. And all it made me think about is we've got to get out there. We've got to go farther. We've got to satisfy that curiosity we have and explore the universe, because we know so little about it. And there's probably some answers to questions we've all been thinking about for some time that are out there. We just have to find it.
So the other mission here was to raise $200 million for St. Jude. You blew past that, but ultimately you paid for this mission, right? You were the benefactor. How do we move beyond that? How do we move beyond space just being the domain of billionaires?
Well, for sure, it's expensive, right? That's why we have to make sure every mission has a profound impact on the world until costs come down to the point where everyone can go and explore among the stars. I mean, this is no different than, Tesla Roadsters, 15 years ago versus Elon announcing $25,000 Teslas just recently, or computers in the 1960s, or cell phones in the 1980s. Like, costs will come down, but while they are expensive, we have an obligation to do a lot of good with it. That's why Inspiration 4 did set out on this massive fundraising effort for St. Jude. That's why we have a very inspiring crew, so that we could make a difference while we're in such a fortunate position to go to space.
SpaceX were talking about how supply constrained they are, right? There's a backlog of willing paying customers, they say. What sense did you get from SpaceX that this type of mission, civilian orbit, will ramp up going into next year?
Well, what I think is going to happen is I think with SpaceX pioneering reusable rocket technology and driving down costs to make space more accessible, is that there's going to be more people working in space. So I think working, exploring. I don't know if you're going to have too many people, going on essentially sightseeing trips. But I do think as it costs less and less to put mass in orbit, we're going to be creating infrastructure in space, and people are going to be working there. During our mission, we had 14 people in orbit at one time. It was the most in history of human spaceflight. A year, 2 years from now, could be 140 and then some.
So you guys were having a nice time up there, of course. You had some excellent views, but you were also conducting scientific experiments, other kinds of study on the human body, human physiology. Were those tests real? I mean, did they give any real meaningful data to SpaceX or to NASA or anyone else?
Oh, for sure. I mean, NASA was listening in on all of our communication loops. There was a NASA WB-57 high altitude research plane filming us as we re-entered. I mean, this was only the third time a Dragon capsule has re-entered the atmosphere since this program began, since the space shuttle retired, or at least a Crew Dragon. There's still an awful lot to learn. In terms of on orbit, we were at an altitude subjecting us to a radiation profile that we haven't studied since the Apollo program. I mean, it's way higher than the space station, which is shielded from our atmosphere to some extent. So if we're going to go to the moon and Mars and beyond, we got a lot to learn. I mean, we had the equivalent of a chest CT scan on orbit for 3 days. Well, imagine going to Mars over 6-month duration and back. That's hundreds of CT scans. That'll kill you if we don't learn how to deal with it. So we were doing all sorts of research and science experiments over those 3 days, and the data is now with the labs. I'm really looking forward to the results.
Jared, I have to ask you about cryptocurrencies, given what we're seeing in the market. The first minted digital NFT track up in space. Shift4 Payments has said it's going to invest and partner more actively in cryptocurrencies. Where do you stand on cryptocurrencies as a currency in transactions, things of that nature?
Well, we were certainly happy to bring that Kings of Leon NFT up to orbit to help raise funds for St. Jude Children's Research Hospital. So in that respect, I'm 100% a supporter. And I think the blockchain is really interesting. I think we are a ways away from crypto being a mainstream form of currency. And I say that as the CEO of a payments company that powers about $200 billion a year in commerce. I don't think we're there yet. It's just too volatile. But we're not ignoring it either. So we are making investments in it to make sure that, consumers are able to do business with our merchants, the way they like. And that's probably going to be in alternative payment methods like crypto in the future.
Jared, in one word, will you go back up into space?
It's got to be more than a word, but I would say if there's a mission that can have a real meaningful impact on the world, then I'd be there.
All right. Appreciate that. Jared Isaacman, the commander of the Inspiration 4 mission, and also, of course, the CEO of Shift4 Payments. Thank you so much for your time. It's been a strange, long week following your adventures in space and on Earth. Back to you, Alex.
All right, thanks. That was a great interview. Really appreciate it. Bloomberg's Ed Ludlow joining us there. I'd be too scared. That's all I got to say. This is Bloomberg.
This past week, we lost a colleague and longtime member of the Bloomberg television family, Robert Chen. Rob was one of the first to help make BTV what it is today. He was instrumental in expanding Bloomberg Television's footprint globally and was part of the team that launched BTV in France, Italy, Spain, and Japan. If you wanted to achieve something that was impossible, you just needed to tell Rob it can't be done. And next thing you knew, it was happening. Throughout it all, Rob was always putting people first, never turning away anyone asking for help. For those of us who knew him over the past 2 decades, he was someone you could always count on to make work and life quite interesting. We will miss you, Rob.
Happening just moments ago, President Biden is meeting with India Prime Minister Narendra Modi. We'll bring you any headlines as they cross as he looks forward to his Quad meeting later on today. All right, busy week ahead, busy week ahead, Guy. On Sunday, German elections, we're keeping a close eye on them. Tons of data coming out, tons of Fed speak also as well.
Yeah, we're going to get Powell, we're going to get Yellen, we're going to get testimony for both of them. We've got, we'll take that live actually on this program, just to be aware of that. So we're not going to leave you hanging on that one. We've got China PMIs, you've got Q2 GDP out of the United States, Hennes and Mauritz out with numbers. It's going to be a pretty packed week. I think we get University of Michigan. I think that's the final reading Friday. You've got PMI data that we want to focus on as well. There's a lot going on next week. This week has felt like it's lasted quite a while. Next week feels like it could be just as exciting.
Yep, although I wonder positioning maybe a touch different now after the sell-off in equities earlier in the week and the sell-off in the bond market as well. So that wraps up for me and Guy on TV. Coming up on television, Richard Haass, Council of Foreign Relations President, will be joining Balance of Power with David Weston on Bloomberg Television and Radio. Guy and I are headed to the cable on Bloomberg DAB Digital Radio. This is Bloomberg.